Good evening, everyone. As distinct from some of the other people, we've spoken a bit about financial services, so this is a bit different. No nervous tics associated with this, but rather we're going to talk about battery metals. And we're an Australian company headquartered in WA, and we're listed on the ASX. We're also listed on the AIM, the London Stock Exchange. We're flying under the radar here. I think that's something that's definitely going to be changing. So what I want to do is give you a helicopter view of the business quickly, and thereafter I'm going to dive down and tell you specifically about how we're building a world-leading lithium battery recycling solution. So, we started our journey as a resource company. We had a lithium mine. It was in joint venture. It was a successful outcome for us. We ended up divesting our equity in that project, and with the money we returned a lot back to shareholders, about 85 million Australian dollars. The balance we've been investing in R&D. And what we've done is we've developed a suite of mineral processing technologies, proprietary tech, and those technologies underpin three distinct business units that you can see in the Venn diagram. And really what we're looking to do is each business unit is looking for sources of feedstock that sit above the ground, so there's no mining risk. And then we're applying these technologies to recycle, to extract and to downstream process to generate battery metals. And so there's four key things that I want to leave you with in terms of what you should remember about our business. So we're enabling sustainable battery materials, so that supports the circular economy. In investing in R&D, not only have we sort of dragged down our carbon cost, if you like, but in so doing, managed to be in the bottom quartile in terms of operating costs, which is a bit unique. Third, we're very flexible, so the business model itself is equally important to the technology, and that's been validated by some of our customers and partners, one of whom is Mercedes-Benz. And then ultimately, I mentioned flexibility, but the way we look to make money, ideally our target market is delivering plant packages and licensing technology to get royalty incomes with the generous earnings multiples associated with that. So look, just to touch on some of these quickly, we're walking the ESG talk, if you like. It is very much core business, so we're generating materials for green applications like a lot of people, but in so doing we're using very sustainable processes that we've developed to generate those materials. So we've won some accolades, AIM Awards, got the Green Economy mark over here in the UK, and we've got this big exposure to essentially the biggest show in town being this energy transition and battery metals. And what you've got, if you look at these images, is there's going to be enormous supply deficits for some of these battery metals, and we're looking to generate a whole basket of products rather than an individual source like a mine might have. So the image on the left shows you mega factory capacity, which essentially just means we're going to have an awful lot more batteries, more modules, more cars, more packs, all of which need recycling because they can't go to landfill, and that's a big opportunity. And equally on the right hand side, you're looking, those green bars are telling you the materials we're exposed to. So 5 of the 6 key materials most affected by the energy transition we have exposure to, and 4 of those come out of recycling alone. I mentioned that what we've done investing in R&D on processing tech has had an added benefit of giving us bottom quartile costs. So this image on the left is just picking on lithium, one of the basket of goods that we generate. And when you put all our costs over the production of lithium alone, you end up being one of the lowest cost producers globally. And that's reflective with some of the other minerals if you look at nickel in isolation or cobalt. So you can think of it as a lithium story. On the right-hand side, you're saving CO2. The bar on the left shows you if you dig the materials out of the ground, there's a certain CO2 footprint, much of which comes from transporting and digging. If you generate those same materials to make new batteries from recycled old ones, you're going to save about 70% on your CO2. So we believe our business model of itself, not just the technology, is really unique. it's smart for us, but it's smart for our customers. So we're one of the few, perhaps if only, that are offering plant supply packages. So rather than saying, look, we want to buy your batteries and we'll keep the products, thanks all the same, we're saying we'll help you to retain your own materials, which are very valuable. And look, you know, validation from some of our customers you can see here in these three pillars. So there are three separate business units. I'll talk to battery recycling on the left a little bit further, but we also have a vanadium recovery business. We've got a technology to pull vanadium out of steel waste. You know, we're getting that product from SSAB in Scandinavia, or looking to, and doing it in joint venture. Likewise, lithium chemicals, it's further afield in terms of development, but we're JV'd with Mineral Resources, a very big Aussie listed company, and looking to develop a plant with Portugal's largest chemical conglomerate. So it's no accident that we look to work with partners, get them to co-fund, and expedite what we're doing. But now look, to deep dive on recycling, this is a 7-year development journey for us. We started off looking at consumer electronics and trying to get cobalt out of iPhones and other gadgets, and then we saw what was happening with the vehicles, and we expanded the flow sheet to include the nickel-rich chemistries that you're seeing in vehicles today. And somewhere along that journey we were approached by a very big German company called SMS. We have since formed a 50-50 JV with SMS. They're a plant builder and it's called Primobius. So Primobius we own half of, and that's the vehicle that's rolling out our recycling technology globally. And before I dive into it, a picture tells 1,000 words. This is not some sort of wild aspiration and a technology odyssey, but rather, you know, we with our partners have built a facility, the first of many to come, in a place called Hilschenbach in Germany. It's near Dusseldorf. And you're looking at SMS's headquarters for manufacturing. Bottom left is the first part of the technology, and I'll explain that to you. We smash up batteries there. On the other side, you've got the refining component, which is at demo scale. And that's where we pull out the individual metals and look to sell them to people making precursor, and then they go back into new batteries. So it goes round in a circle. Look, and why bother with all of this? Recycling is extremely important at present, notwithstanding that the batteries have a habit of catching on fire and you can't put them in landfill. There are other reasons, and one of the biggest is scarcity of battery raw materials. And if you look at lithium on the left-hand side, you know, it's forecast that we're going to have really significant global deficits, some 55% in the case of lithium in 2030. And so what do you do about that? The graph on the right shows you in the light grey there, peak lithium from mine supply, you know, just before 2040. And that begs the question, where does the rest come from? And you know, consensus says that the vast majority is going to come from recycling sources post 2040. So this is a really exciting space to be in. Aside from what I've just mentioned in terms of why you need to recycle if you're an OEM or the owner of these batteries, there's also some regulations here in Europe with regards to the European battery recycling regs that have just been legislated, and they're huge tailwinds for businesses like ours. They essentially say we need complete traceability, we need a stamp with a QR code on every part of the supply chain. We need to know the CO2 footprint, we need to know from whence it came. We also need to know that recyclers have recovery rates exceeding what they do today. And what has been done historically is you get old lithium batteries, you put them in a smelter, you burn them, half of it goes up a stack, and the balance you recover. So it's pretty crummy recovery rates, which is not, that's the sunset industry. The sunrise is what we and some others are doing, getting far better recovery rates. So we're already meeting the 2031 targets. And then of course cell makers need recycled content in the future, and there's only one place to get that. In terms of what it is that we do, at a high level on the left here, it's a 3-part process that we've developed. So first of all, if it's a module out of a vehicle, for example, we'll discharge and dismantle those modules. We'll then put those cells into what we call a spoke. It's a shredding circuit, and we create an intermediate called black mass. We also pull out plastics and steel casings and some foils. They have value, but really the end game is about taking that black mass to what we call our hub, which is the refining circuit. That's where our smarts, our IP really sits, or the majority of it, and we sequentially with acids pull out those valuable metals to go back in to make new batteries. So, and I should mention that this is patent pending in 14 jurisdictions at national phase, and we've just been granted in Australia, so expecting quite a few of these to drop now. And you know, why is this important? And it's really because if you are an OEM, if you're a car maker who invariably is going to become a cell maker as well, you have two choices. You can pay someone to recycle for you and acquit your requirement, but you lose the materials. If you go with someone like ourselves with a different model where we'll license you the technology, you turn a cost centre into a profit centre and you retain those metals. And those metals are extremely important for strategic reasons for car companies. It's also quite a lucrative business, which is why we're in it and why we're intending to reward shareholders. There's just some information on the left here about our costs. Sort of leave you with that for a later time. But on the right-hand side, it gives you a taste of the economics. So each of those bars and the different colours represent the contained value of some of the ingredients in these batteries. If you cast your eyes to the far right, the predominant chemistry of tomorrow essentially has constituents worth about $9,000 US. The green line represents what it costs us to pull it out. Call it 4,000. There's a margin of $5,000 per tonne. So if you build a 20,000 tonne per annum plant, there's $100 million in gross profit. So that's just to give you a sense, and I'll explain to you about the different scale of plants that we intend to build. But of course the technology, it is unique. We have, you know, we're strongly of the belief that we have freedom to operate. It's not a winner takes all. There are others doing similar. And if I explain this to my mum, really the reality is it's different reagents, different end products, similar technologies. However, what we're doing that's very different is the business model. And I mentioned to you, we are one of the few, if only party, who will provide an OEM with a plant package and license the technology, which means you get to keep the raw materials at the end. And if you want to make batteries, that's critical. So, happy to do a couple of things. We act as principal. They were the pictures I showed you before. We make money. We get paid in Europe for actually receiving the batteries. We then make money out of selling the intermediate product. We're happy to be in partnership, and this can be a journey with an OEM. You know, for example, Mercedes-Benz, perhaps we co-invest with them, but ultimately the end game is licensing in order to get that royalty income and different PEs, and it saves us needing to invest all that CapEx. You know, how do we differ from the peer group? I avoid saying competitors, and the reason being is most of the other groups who we haven't named but tried to give an indication, they're merchant recyclers. So they need to source the feedstocks, and we saw that as a challenge, and it is. That's the battleground. What we want to do is work closely with a partner who already has the feedstock and get it over the fence. Because transporting batteries is a dangerous business, frankly, and logistically it's tough with regulation. So that is what's unique, but there are others, and there will be a really vibrant industry with a few consolidated groups doing similar to what we do. Probably a good junction to talk about our partner, the pictures you've seen, but Primobius came along. They are a 150-year-old plant builder. They were chasing exposure to battery recycling. They have a footprint globally with circa 14,000 staff, and what we brought was the technology. They have the plant building expertise, but moreover, they're headquartered in Germany. They're very reputable. They have a really extraordinary reach, and that helps us not just with German auto, but elsewhere. And together, that gives us scale to go target what is going to be a huge market, huge total addressable market. This image here from McKinsey showing you by 2040, available cells for recycling is some 20 million tonnes. And to put that in perspective, the study that we've done is on 20,000 tonnes. and we plan to build many, but it's a drop in the ocean in terms of the size of this market. So why 20,000 tonnes? The image on the right just shows you, that was the scrap from a typical gigafactory. That's how we saw ourselves entering the market, but in reality, we're now studying doing plants 10 times that size. The validation piece, our marquee customer is Mercedes-Benz. We have a 5-year collaboration with Mercedes. So this is important for a couple of reasons. I mean, not only just, a great brand to be associated with, but we're in the tent with them on new chemistries, how they're going to make batteries, how to dismantle, how to discharge. So it's a tremendous opportunity. We have given them a license for R&D, at 10 tonne a day, so fairly small scale. And we've just signed a purchase order, so we're supplying them the plant, and that'll come in 2 stages. But the end game is, to support them with their global need, because at the end of the day, come 2040, Mercedes will have nearly 1 million tonnes of recycling commitment. So, that's a big prize. We need to do a good job with Mercedes, but super exciting, and we only just signed the PO for the spoke component I showed you in the image. So that's the smashing plant, and then the hub comes, touch wood, imminently to follow. Second customer is Stelco. They're a steel maker in North America. It sounds strange. Why would they be interested in recycling? And that's because they get their steel from car makers, and they're transitioning to do more electric arc for sustainability reasons, so they need scrap steel. That steel will come with more batteries going forward. So they want to offer the car makers a slam dunk, essentially. They'll take the steel, they'll also take and deal with the batteries. So we have given them a license, a 10% gross revenue, royalty associated with that, and we have an option to buy in. So that will be our first big plant. I mentioned the smaller plant that we own and that we're giving Mercedes. Now this is the first 20,000 tonne. Itochu, we have an MOU with. Itochu, for those not familiar, they're a big trading company. They also have a stationary energy storage business called SmartStar. They have recently announced they are going to manufacture vehicles here in Europe, and they're going to lease the batteries, which means they will have total carriage of those batteries at end of life. Ergo, that for us to partner with them, you don't have that feedstock risk. So that's pretty exciting, and we look forward to explaining more about that. And then we've got a suite of pre-existing licenses, again on a 10% GSR basis in some different jurisdictions in Europe, and this really is our model going forward. And look, this is just a recap slide to say, a little bit of information there, but how do you think about this in terms of how we make money and what the growth looks like? So first of all, this is where the pictures were in green. This is Hilschenbach. We have a permit to operate commercially at 10 tonne a day, and we have a demo refinery there. That's operational. We just got a PO for Mercedes for their shredding plant, and then the refining section will follow, and that's at 10 tonne a day also. Essentially, Mercedes are doing the demonstration work for us to get product ready and scale up to the next phase. And then Stelco will be almost 10 times bigger than the top line in North America, and likewise we'll get a purchase order from them for the spoke, and then the hub will follow, and that's where the first royalties will come from. There's a little bit to digest here, but catalyst rich going forward for us, and I mentioned this product readiness is what our partners call it. So we are product ready at 25 or 100 tonnes per annum or 10 tonne a day, and that's what we've just sold to Mercedes. We can roll that out. We will then do the same with the hub, and it goes stepwise. And then, we're working on being product ready for 20,000 tonnes for Stelco. We're doing the studies now, and we're also doing the studies on 10 times bigger again. So the economies of scale with recycling are really significant. 20,000 tonnes only touches the sides in terms of that total addressable market and the real money you make when you get a lot bigger. So this business, Primobius, there are a bunch of aspects to it that make us really unique, from the economics to the sustainability, and the validation from some of these marquee clients. And then just to leave you with, now I'm back to Neometals. This is the head company listed on the ASX and here on AIM. We've got a really clear strategy. We've worked with partners before. We've returned a lot of money to shareholders. So I see this as a very compelling business, great investment opportunity. But we listed here on London without raising any money. It was a compliance listing. Because of the recent sequence of catalysts, now it really is starting to tie together, and it's given us an opportunity to speak to, more of a retail audience and to start to improve how we trade over here and do a little bit more travel. So really appreciate your interest in the story.
Thank you very much, Jeremy. Thank you. Really interesting, thank you. Do you have any questions for Jeremy, please? I will kick off if not. Automotive manufacturers aside, for batteries, are there any other large users or industries that you could work with?
Yeah, absolutely. So it's not just auto. So if you're a cell maker, you will have anecdotally anywhere between 10 to 30% production scrap before it even gets its way to a vehicle. So that's almost the supply for today, as well as crashes and warranty returns. Stationary energy storage is another source of those batteries. There's a lot of waste aggregators here in the UK and elsewhere in Europe. So it ends up finding its way to several weird and wonderful places, and that's part of the challenge, I think, for OEMs with the legal responsibility to recycle, is to figure out how they get their hands back on it or equip the same.
And you talked in the end how you had a client that were operating a leasing model. Do you think in the future that's going to be something that more vehicle manufacturers employ? Do you think that's going to be, for me as a consumer, I'm going to have a choice whether to have a leased battery or to buy it outright?
Yeah, I do. I mean, the short answer is I do. I think there'll be a lot more of that. There's a company in Vietnam called VinFast, from memory. They have a leasing model. There's a lot of, the big brands are talking about doing the same. And the benefit of that to them is that they have control over what is a source of raw materials for the future, and they also have a legal obligation. So it's a good way to retain carriage of what is an asset.
Any other questions, please? Here, please, Pete. Thanks. Thank you.
Yeah, thank you for the presentation. Just a quick question, really. How do you need to raise any more money before you start getting revenue in, or is it all funded up to till you start getting money in?
Yeah, we haven't raised money in an awfully long time, for about 10 years, I think. So, look, potentially we've got revenue now. It's small. It's modest revenue in the joint venture. It's not being distributed back to the head company. It's being reinvested. So I guess one of the things that I've recently been reminding people is it's not in the never never for revenue. There's modest revenue now. There's an order book. It's growing. So, of course, we charge for engineering, design, the plant packages, and we're getting purchase orders. The reason to list in London was to ensure that we had access to some other pools of capital rather than Australia, and also for the fact that Europeans have a better handle on this supply chain, essentially, not to denigrate Australian investors. So, yeah, look, it's possible, but we're not backed up against the wall with regards cash. I think we had at the last quarterly about 24 million Australian dollars. Look, anyway, some details here if people want to read it, what the constituency of the share register looks like, etc. But
I was looking at a phone about looking up. Did I see you incorrectly, or are you listed in Stuttgart as well?
Yes, but that's an over-the-counter exchange, so not through doing necessarily. You just get a letter one day saying, congratulations, you're on Stuttgart.
I'm a Stuttgart fan, so...
Yeah, but interestingly, when we have Germanic news, well, I think we're listed on about 7 over-the-counter bourses there, there's really big volume out of Germany as long as the news is Germanic.
I had a question. As a presentation earlier, which showed the rise of China as an exporter for EVs. And do you feel comfortable with the opportunity in China? Would you try and approach that market yourself or with a partner?
We're probably most focused on North America and Europe, given the growth of battery production and the supply chain playing catch up with China. And there's some other technology issues associated with China. However, a lot of Chinese OEMs are obviously coming to Europe. I think, the reality is similar to the Inflation Reduction Act, they need to show a level of, Western ownership in whatever they're doing. So there's a lot of opportunities for partnership, and, the reality is that the Chinese are the biggest cell producers in the world. They know how to do it best, and, they're coming over here to Germany and elsewhere, and, most likely they're going to really make a big dent. So very open to working with whomever if it makes sense to shareholders, but less inclined to go to China, and language is one of those issues, simple things like that. I mean, how do we penetrate given we're an Aussie company with German partners?
Any other questions, please? No? Okay, well, Jeremy, we're going to finish there. Thank you very much. We'll catch you over a beer. That's it for tonight. Thank you very much indeed for coming.